Historically, the economy does well for a few years, then the economy struggles, and then the process repeats itself. We've all seen it. But how can that affect your investments? And perhaps more importantly, how might you react to this economic cycle? I'm Scott Connor, a 30-year veteran trader, and today you'll learn about sector rotation, right here on Virtual Trade. Welcome to Virtual Trade. In this episode, we'll identify how the ups and downs of the economic cycle affect different sectors of the economy, as well as your investments. In Tools of the Trade, we'll review sectors within the Thinkorswim platform. And finally, new trader Jenny Horne and I will have a look at how to view the current market's over and underperforming sectors. The economic cycle is when the economy moves from growth to recession and back to growth again. It's one of the most influential forces in the stock market. The economic cycle is significant because it plays a large role in determining corporate profits, an important factor that influences stock prices. What's important to know is how the economic cycle can impact different sectors. Stock market sectors are sensitive to different stages of the economic cycle. Some may outperform when the economy is growing, some may outperform when the economy is in a recession. The varying performance is something that investors refer to as sector rotation. Now, sector rotation is driven by investors buying and selling the stocks during the economic stages of growth and recession. When thinking about sectors and the economic cycle, let's take a moment to think about the real estate market. Certain geographic areas appreciate more than others. Certain types of properties can gain value more than others. What appreciates at any given time depends upon supply and demand. And finally, what appreciates tends to cycle over time. Now, let's take a look at how sectors typically perform throughout the economic cycle.
Let's suppose that the economy is emerging from a recession. One of the first sectors that investors usually move or rotate into is financials, which includes businesses like banks, brokers, and insurance companies. Why? Toward the tail end of a recession, interest rates are unusually favorable for businesses such as banks. Consequently, investors rotate into the financial sector when they anticipate a recovery. After the economic cycle turns up, investors usually next rotate into the technology sector. This sector is sensitive early in the economic cycle because businesses invest in new technology to make productivity gains. As the economic recovery gathers momentum, investors typically move into the consumer cyclical sector. This includes businesses like automobiles, housing, and retail, things that are discretionary or non-essential. Consumers typically grow more confident as the economic recovery takes hold. And with the growing confidence can come increased spending on discretionary items. After consumer cyclical, investors generally rotate into the transportation, industrials, and basic materials sectors. This is usually considered the midpoint of the growth stage, which is when these types of businesses increase production in response to increasing demand. As the growth stage matures, investors typically rotate into the energy sector. At this point in the cycle, the energy sector benefits from increased demand for transporting goods during the previous stage of the cycle.
So to recap, some sectors outperform and some sectors underperform during different points of the economic cycle. The financial sector tends to do well when the economy is emerging from recession and interest rates are moving. As the economy improves, the technology and consumer cyclical sectors tend to follow suit. Now, let's examine how we can potentially identify changes in sector rotation and what to consider when these changes take place.
If an economic recovery is well underway, look for new upward trends to emerge in the transportation, industrials, and basic materials sectors. Conversely, in the middle of a recession, look for new upward trends in sectors like utilities and healthcare. Being aware of sector rotations can help active investors adjust their portfolios. And although there may be indications of a sector coming into or moving out of favor, remember that it's difficult to predict with certainty and try to look for confirmation when possible. For example, if an active investor observes that a sector might be coming into favor, she might hold existing investments in the sector or look for new opportunities in that sector. On the flip side, if she observes a sector seems to be going out of favor, she might raise stop losses or sell holdings within that sector to cut losses or lock in profits. Applying sector rotation in these ways can help investors manage a portfolio and even present new opportunities. But sector rotation takes some time and experience to learn. It's a good idea to go through at least one economic cycle and observe how investors rotate from one sector to the next at each stage of the cycle before making your own decisions based on sector rotation.
As we wrap up, it's important to remember that different sectors outperform and underperform during different periods of the economic cycle. Watching price trends in sectors can help you identify which sectors are gaining strength. And active investors may try to take advantage of sector rotation by entering, exiting, or rebalancing positions accordingly. Welcome back. It's time for Tools of the Trade, where we look at the various tools within TD Ameritrade, Thinkorswim, and Mobile Trader. In today's segment, we'll be examining the Thinkorswim Visualize tool. And our goal is to learn how to take a snapshot of the market through this dynamic tool that we'll find on the Thinkorswim platform. We'll get a quick look at the different sectors, the different indices, and find a quick way to see which stocks are moving up, which stocks are moving down, and get a better idea of how these different sectors and indices are comprised. What are the bigger and smaller stocks? We'll get all of this from this tool. To get started, first thing we'll do is on the Thinkorswim platform, we'll go from the Monitor tab and we'll jump right into the Market Watch tab. Now this is where we're going to find the Visualize tool. So I'll go ahead and click on that now. And let's enlarge this a little bit, so I'll hide the left side bar. So we'll temporarily hide our watch list on the left side. Now you can see by default it's going to open up to all indices, and you can see that's quite a few different stocks that we're seeing on here. What we're going to do is start off by clicking on the indices drop down button and go straight to the S&P 500. Now we're going to start with the S&P 500 because many times as we've talked about the S&P 500 used as oftentimes a benchmark for the US stock market. Now I'm sure you're familiar with the Dow Jones and the Russell and the NASDAQ, but oftentimes the S&P 500 is the most commonly cited of the indices, especially talking about the US markets in general because of its broad diversification. So now we're in the S&P 500, and you can see all the different stocks that are listed here. First thing I want you to notice is look at the different sectors. You can see information technology here. You can see energy, the different sectors here, materials. They're all listed here for you. So it's a quick way to see the different sectors within the S&P 500. There's about 10 sectors plus an 11th that oftentimes will take up the retail stocks. Now, what you want to notice in here is how big are these different sectors within the indices? For example, the S&P 500. I'm going to move my mouse over here to where it says information technology, or the tech stocks. And we can see how big this sector is compared to the other sectors by just sort of moving around the circumference of this area. You'll see it's kind of a wide line that separates this group. Now you can see that this group is rather large compared to some of the other sectors when you break those down into their sort of the division points between those different sectors. Some are much smaller. So you can see even the S&P 500 is a significant amount of the S&P 500. Almost, maybe it looks like about 25% is in that particular sector. Now, what else can we learn from this? Well, if we want to break down the individual sectors, we can go into the subgroups of the S&P 500. Now watch how I do this. I'm just moving my mouse back to the S&P 500, click on it once again, and now you'll have a drop down of those different sectors. For example, let's go into information technology, and you can see what I did here is I opened up just that sector, the information technology sector. Now you'll notice that, well, wait a minute, Scott, it looks like there's still some sectors within this. Absolutely right. Those are the subgroups or the sub-industry groups within that one sector. So this tool actually allows you to dig a little bit deeper into the sectors and see the subgroups, which we've talked about when we built Jenny's watch list, so you can see how those behave as well. Now, what's the other thing we're going to notice? Well, there's different colors, obviously, between the different stocks within the sector. You can see, for example, Google's sort of a reddish color. You can see Facebook on this particular day is a black color. Anytime it's sort of black or gray, that means the stock is really not moving much up or down. If you see a green color, I'll move my mouse over here, you can see Cisco on this particular day is moving higher. That's what the green color is telling you. If you look for the red colors, that is a stock moving in the downward direction. Now, the brighter it is, the more it's moving in that direction. So a bright green would be a stock that's moving up rather significantly. A bright red would be a stock moving down significantly for that particular day. So this is a great way to go ahead and see how those, the direction of the different stocks within a sector or the whole market itself. Now, there's a couple other things that you can notice in here. And let's go back to the S&P 500 itself. So when we're looking at the whole S&P 500, you can see obviously some blocks or individual stocks are much bigger than the others. Well, that's because what those boxes are telling you is how big is that stock relative to all the stocks within the S&P 500, all plus or minus 500 stocks that are in that indice. And as you can see, Microsoft, Apple, I'll move my mouse down here, the lower left-hand corner, you can see obviously one of the larger companies within the S&P 500. Now the way that they determine the value of companies within the S&P 500 is really rather simple. They take the total number of shares, multiply it by the price of the stock, and that gives you what's called the capitalization weighted value of that stock. And as you can see, Apple rather large. You can see some other names in here, Amazon, JP Morgan, Johnson & Johnson. So again, a great way to break down how big the companies are within those different watch lists, whether you're looking at indice or breaking it down to a sector. So those are some greats. Now, what else information? Well, for example, I'll move my mouse over Facebook in this example. And you can see just to the right, in blue, gives me some more detail about Facebook. Right? So if I want to get quick information about that particular stock, just hover your mouse over that stock and the blue box will open up giving you more information. Now, how do I take this down to a personal level? So in other words, if we're looking at Jenny's first watch list that she built, let's go ahead and do that. I'm going to jump right in here to the personal button. Let me go ahead and click on that again one more time. And let's hide the S&P so we can see this a little bit easier. And we can see Jenny's first watch list. So I went ahead and put that in. And remember, Jenny purchased these stocks, and now they're part of the portfolio. But again, if you want to just take a quick snapshot at your portfolio or your watch list, or both, just go ahead under the personal column and take a quick look. So you can see on this particular day, kind of not much movement in her portfolio. I see a lot of grays, a little bit of red here, and a little bit of green as well. So on this particular day, I'm going to guess the market's not really moving too much. We don't see a lot of movement in the stocks overall. So if Jenny were just to take a few seconds, go right to the Market Watch tab, open up the Visualize, put her portfolio in there very quickly, she could just in one snapshot get a great idea of exactly what's happening on this particular day. And of course, you could drill down a little bit deeper into each of those stocks as well. So this is a great tool on the Thinkorswim platform. Like I said, whether you're looking at the market overall and you want to get just a quick snapshot or take the temperature of the market, if you will, the pulse of the market, this is a great and easy way to do that. And you can look at the different indices. We just looked at the S&P 500, but oftentimes people will look at the four major indices, the S&P 500, the Dow, the NASDAQ, and the Russell. And of course, any personal list that you might have as well. So that wraps up our episode here on how to use the Visualize tab within the Market Watch portion of the Thinkorswim platform. Now don't forget, if you would like more information on these tools and other great education, visit the Education Center on tdameritrade.com. Welcome back to Virtual Trade. I'm joined by new trader Jenny Horne. Jenny, welcome back to the show.
It's great to be here, Scott.
We're going to have some fun today, Jenny. We're going to continue our talk about sectors, but we're going to use the Thinkorswim platform to sort of get an idea of how the sectors are performing. How does that sound?
It's great. This is something people talk about all the time, and I never really know how they find this information, so
You're absolutely
this is
right.
useful.
Oh yeah, because you hear that term all the time, sector rotation. What does that mean? Well, that means people oftentimes, when they're managing their stock portfolio, just like your portfolio, is that they're watching the sectors over time to see how they're doing. And we've talked, or at least we touched on rebalancing. So sometimes if sectors are really strong over periods of time, people might actually reduce their exposure in those sectors because the value has gotten so big, and then redistribute that some into the sectors that have not done as well. So it's sort of a rebalancing.
Okay, that makes sense.
All right, so let's dig in and learn a little bit more about the sectors. What we're going to do is let's start off by going to the chart tab, which I can see we're on already. So Jenny, let's start off by looking at, let's say the S&P 500, SPX would be the symbol.
Now, do I just type that in? There we go.
Exactly. Now we're starting with the SPX because, again, this is the overall market, sort of the benchmark for the U.S. stock market. It's the S&P 500. So that's why we're going to start on this. Now, one of the things that we're going to do is when we look at these sectors, we want to look at them at different time periods because it's hard to get an idea of what a sector is doing if you're just looking at a couple days. So we might want to look at a longer time period. Does that make sense?
It does.
Okay. Well, let's do that then. Let's go to the change the time on this. Let's start off with how about 3 months? We'll go there for starters, if you will. All right. So we go to D, there you go, and we can look for, and now there's a couple things we can do here. We can pick from the section there or go up and click on time frame, and then we'll pick our own time frame. So maybe we'll go with a daily. As you can see, we're on daily. Now click on the 1 year, and then let's look for 3 months. See, I might have to scroll up to find it. There it is.
There we go.
Okay, and then hit OK. And now we're looking at a time frame of 3 months. So that gives us kind of a starting point here. And we can see what the S&P 500 has done. And what would you say in the last 3 months? It's been a little choppy, but would you call that an uptrend?
I would definitely call it an uptrend.
Okay, I agree. That definitely we have an uptrend on our hands here. So now we have an idea of the last 3 months what the market has done. Now let's start breaking down to the individual sectors. Does that sound good?
Sounds good.
All right, so let's do this. How do we get to the different sectors on the Thinkorswim platform? Couple different ways we can do that. We've talked about the watch list, but what we'd like to do, Jenny, is take the watch list and take each of the different sectors on the watch list and conveniently move them into our chart that we just set up with 3 months. How does that sound?
Sounds good, but I'm not sure how we do that.
Okay, so I will guide you through that, no problem. All right, let's go over to the watch list, and you can see we're looking at Jenny's first watch list, or basically your portfolio right now. And what we want to do is click on the top button there on Jenny's watch list, and we're going to go down and find, what we're going to find is the list of S&P 500 sectors. So go ahead and drop down to the public list under S, and we'll look for S&P 500 sectors. Or indices. Let's see, where is it in there? There you go, sector indices, you found it, perfect. Now, you can see that they're all listed there on the left side bar, but Jenny, they have sort of an interesting description there. So what we need to do to find out of what the names of these different sectors are, let's add a description to that. And we can simply do that by clicking here on Customize, and then we'll drop down to the word description. So go ahead and scroll down to description, and we'll put that in there to give us a column that will actually give us the names of each of these S&P 500 stocks, all right? All right, so we'll add that item. Now before I hit OK, and what we're going to do also is let's give ourselves a little more room. Maybe what we'll do is we'll take out percentage change and then go ahead and hit OK.
And maybe we should move this up so it's
yes,
closer to
good
the
idea.
symbol.
Let's do that right next to symbol and description. Perfect. Good call. Now, as you can see, we have a little bit less room, so if we widen this out, it'll start to give us the names. Now, what we can also do here, Jenny, is let me go ahead and grab this. You can sort of grab these different markers here and scroll them over to give yourselves a little bit more room by doing that on the column headers.
So I could make
so we
this
can,
one.
Yeah, we can widen that out. We don't have to go too far. We just want to see the name of each one, and then scoot that over. All right.
I think that's good enough.
Okay, now these are the different sectors, and as you can see, what are the sectors? And we've talked about this, about the 10 or 11 sectors. A lot of people will add real estate, some won't, but again, if you add real estate, you can see you have about, on our screen here, you can see we have about 11 main sectors that we're looking at. And of course, our description on our left side bar is now showing that as well. As a matter of fact, Jenny, what I'm going to do is I'm going to go back in here and go to Customize one more tour, and I'm going to get rid of the last and remove that because I want to give ourselves a little bit more room here on the left side bar. So we've got the different sectors set up. Now what we'd like to see is how they're performing, and to be able to do this, we can't really compare their numbers because they have quite different numbers. Like, how do I compare a $50 stock to a $100 stock?
Right.
What we want to do, Jenny, is see how they move on a percentage basis relative to each other. Now, how do we do that on the Thinkorswim chart? Well, take a look. Up here in the upper right-hand corner of the chart, you'll see sort of some squiggly lines there. I'm going to click on the squiggly lines, and if you drop down, it's going to go ahead and let you see your price as a percentage, right? As a percentage. So in other words, now when I go ahead and click on the chart, you can see above and below the 0 point here, what percentage move you've had over that period of time.
Okay. So then this makes them all kind of on an even playing field.
Exactly, right. Okay. So now it's like a common denominator. We can sort of make comparisons on a percentage basis. So Jenny, right now, if you're looking at the S&P 500 or SPX over the last 3 months, what is the percentage gain right now?
I would say almost 5%.
Yeah, 4.95, exactly. It was not a trick question. That's exactly right. So now we can sort of get an idea that in the last 3 months, the market in general has been up about 5%. So
that's pretty good.
Yeah, that is pretty good. So let's go ahead and see how the sectors have done at the same time. So Jenny, I'm going to have you go ahead, since we linked our watch list, which is yellow, to the yellow on our chart. Now anything that we click on in this sector list here will pop right into our chart. So let's go ahead and pick one or two and see how they've done.
Okay.
So what are you starting with?
That's information technology.
Information technology.
Which looks like it's doing the best today.
And look at that. What's it up right now? It says...
It's up almost 10%.
Wow. Okay, so obviously this sector has outperformed the stock market in general.
Wow, yeah, up 10%, that's not bad.
Right. Let's pick another one. Maybe I'll let you go ahead and pick.
Okay, I'll pick financials.
Okay, let's take a look at financials.
Not doing as well.
Not as well. As a matter of fact, that's a minus number in front of the 2.8. So
It is.
at this particular time, that sector is not only underperforming the market, but it's actually got a negative percentage gain or return, if you will, in the last 3 months.
Wow, yeah, and that's not as good.
So it'd be safe to
obviously.
say that this, in the short term, in the last 3 months, this sector has been under a little pressure. Okay, perfect. What else do you see in there? Let's pick maybe just one or two others. We've done information technology, financials, and what else?
Let's do consumer staples. I hear about them a lot.
Okay, consumer staples. And right now, what does that look like for the last 3 months?
They're almost, I mean, they're not down a whole percent.
No, it's actually kind of unchanged, if
Right.
you will. But definitely not keeping up with the market itself. The SPX was, what did we say, up close to 8?
Yeah, so
Okay.
I think that this one is still an underperformer.
This one's lagging a little bit as well. All right, so Jenny, one of the next things we want to do then is let's take a look at these sectors in a little bit of a longer time period and see how the difference is going to be between the short term and the long term. And again, let's go back to the first one we looked at, which was information technology. And we remember that was up about 8%. Now let's go from 3 months to maybe let's get a full year's look at, a 52-week look.
Okay.
And we'll change that style to
1 year, 1 day. Would that
1 year,
work?
1 day. And remember what that means. It's 1 year time period, and each candlestick represents 1 day.
Okay.
All right, so that's where we're
A
going
lot of more days here than.
Perfect.
Yeah.
Now, what is the percentage gain right now on that number?
31%.
31% over the last year. And again, now remember we're looking at technology. So you can see that it was leading in the 3-month period, and it's also leading in the 1 year period.
Because 31, I mean, that's outstanding, I'd say.
That is outstanding, absolutely. So, again, nobody knows where it's going to be a year from now, but at least we know going in for the short term and the longer term, it's been performing well.
And you can see even as of lately, it's done really well because I'm seeing this uptick as of lately.
Right, absolutely, Jenny. There's been some volatility. You can see some peaks and troughs here, but you're absolutely right. Over 1 year, it definitely has been in an uptrend. All right, what was the other one you looked at?
I believe we looked at financials.
All right, let's take a look at financials over the last full year, and what are we seeing there?
Not the same pattern as we saw before. They definitely
No.
had their best month around here. I think that's February, but they've been hurting lately.
Right. So, but at least for the last year, they're up what? 9?
They're still up 9%.
9%.
Yeah.
Okay, which it's not a bad return, obviously, but much better than the short term, which we saw, which was negative.
Right.
So even though the sector's under a little bit of short-term pressure, for the last year, it's up about 9%.
Yeah, which isn't bad.
Right, and that's the beauty of doing this, Jenny. We're getting a bigger perspective on what these different sectors are doing. Let's take a look at one of the others that you had as
So
well.
I think I picked staples.
Consumer staples.
Now they're down more because I think they weren't even down a whole percent before.
They weren't, and now you can see that over
Almost
last year,
4%,
this
yeah.
sector, and for a longer period of time, has been under some pressure.
But if you look at like we did the last 3 months, they are doing better as of lately. So you
Exactly.
could say things are on the uptrend for them.
Exactly. And so this, and actually you hit on something that's really important because we mentioned a little bit about the rebalancing. So if we were in a sector that had moved up a huge percentage point, and we were saying, uh-oh, we think this sector might be getting a little bit ahead of itself, well, we maybe don't want to get rid of exposure in that sector, but maybe we could reduce some of that exposure. Maybe reduce some of the number of the shares we have in the sector that's gone, parabolic, if you will.
Right.
And then maybe redistribute that into a sector that's been under pressure that's starting to show, like you said, a little strength.
Yes, I definitely would say that I believe they'll hopefully kind of rebound or continue rebounding.
Exactly. And that's the beauty of doing this and setting up the sectors, changing your chart to a percentage change, and of course, Jenny, then making those comparisons between the short term and long term to get a better feel for how these sectors might be moving.
Yeah, and I think this is super useful. I've never really known how you can look at each sector individually before.
Well, great. So what did you think about this session so far?
I think it's awesome because, again, like I mentioned in the beginning, I hear people always talk about like healthcare sector doing so well, and I never really knew how to visualize it.
Not only visualize, but you can make the comparison.
Right, exactly.
All right, well, Jenny, that's going to wrap up this portion, and I'm glad we went through this because you're absolutely right. This is very critical for people that are actively watching or managing a portfolio.
Exactly, yes.
All right, well, Jenny, thanks a lot. That was a lot of fun. I look forward to our next time.
Thanks, Scott.
In this episode, we examined how the economic cycle can affect the market sectors and consequently your portfolio. We identified on the Thinkorswim platform how individual stocks and sectors are connected. And Jenny and I continued the process of learning to use resources that can help her manage her portfolio. I'm Scott Connor, and thanks for watching Virtual Trade.